started when it'll take a second to roll. What up, what up? How's everybody doing?
What up?
Hey, you guys don't mind, type in a hot second the audio, how the audio is, and we'll make sure to get this thing going.
Where's the chat here? Okay, now I see.
There's usually like a from what me and you talk about, there'll be like a 5-second delay from the
yeah.
Google Hangouts is slow for some reason.
Yeah, you would think that this would be like on point with their shit. I guess if we have a lot of people in here, then it might just drag it down.
Yep. Yeah. You would think that Google runs the whole world that they figured it out.
Oh yeah.
They seriously do though, man. There's like nothing, man. I'm always wondering. I'm like, I wonder if they're reading my emails. They know all the creepy pornos.
Oh, they got something going on, like with the government and shit, man. They're everywhere.
No doubt. All right, folks. Welcome. So this is our, I don't even know, 6th Path to Profitability webinar. And as you guys know, most of the Path to Profitability webinars we've been doing have been with my students, my past students, and we've been interviewing them about their path to become professional traders. And one of the things that I'd been kicking around for a long time was, we should expand this and bring in traders that are just at the top of their game, traders that I've known for a long time. And I've been friends with Cameron now since, I don't even know, probably 2008. And a lot of people don't know this, but out of all the people that are really on the social media right now, like me and Investors Live and Tim Sykes, Cam was actually the first one of us with his own website. He had a website called the technicaltrader.net. And I remember when I didn't have Bulls on Wall Street, I used to always Google, like, learn to day trade and stuff like that. And Cameron's website used to pop up all the time. And he had, like, this obnoxious website that was, like, all in black. And he'd be talking about these wins with his black service crew. And I was like, man, that's really racist to be calling all his, his crew black guys.
You were confused about that, yeah.
I was really confused about that. And, about a year later, I opened up my business, and me and Cameron hit it off. We used to talk on Twitter, and we'd always be kind of around talking about the same stocks, and we had like a very similar attitude about, this type of job and how we live and stuff like that. And so, one day I was like, oh, why don't you give me your GChat? And then we hit him up. I hit him up on GChat. And literally for years after that, like, we'd hang out on GChat talking stocks, life, girls, like whatever. And we never trade the same stocks. We never trade the same stocks, but it was cool to have, like, a trader friend that, like, is kind of doing the same thing that you're doing, that's kind of going through the same stuff. Especially when the markets suck, like our businesses get slow, our trading thing, we're like suicidal. And so me and him developed like a really cool friendship. And then about a year ago, I went down to San Diego. We went out for New Year's. I was with my sister and my cousins, and Cam took us out. Great time. And so when I was doing these webinars, the first person I thought of, like when I wanted to expand this out to professional traders, was my good friend Cameron. Who has been doing this since he's in college, and I think he's got a really, really cool story, because a lot of times when you see Cameron, you'll only see the stuff you see on Facebook, which is the girls and the cars and stuff like that, which is pretty freaking cool. But most people don't know that how much hustle he had to put in, because he did this while he was in college. And then to be 22 years old and start up your own business and become a professional day trader, that is not easy. It requires so much talent, but an incredible amount of hustle, and there's a lot of ups and downs, and so he's been through it all, and so I wanted to bring him on. So Cam, why don't you give us a little bit about your background on how you got started in this, or something along that end. Idaho.
Their laptop here is turn it on. But yeah, no, I'll give you a background check of basically how I got into this. Was I didn't really know what I was going to do. Like in high school, I didn't really know what I wanted to go for college for. I mean, I kind of knew my best friend's dad was a stockbroker, and he was always coming home in his slick-ass business suit and his BMW, and I was like, your dad's a pimp. I want to do what he does. And so I was going to school. I went to Oregon State University, originally from Eugene, Oregon, and so I was going to school to be a stockbroker. I wanted to be like a stockbroker. At the time, I didn't really know what a stockbroker was. I just knew it had to do with the stock market. I was fascinated by stocks, and so that's what I was going to school for. And then in 2005, my aunt gets this stock tip about this company called Cytomedics. I think the ticker was GTF, or it's GTF now if it's still even trading. And so everyone's getting all hyped up about this stock pick in my family, like my aunt, my mom, my girlfriend at the time. And so I end up thinking, you know, I had an okay car at the time. I had a BMW M3 that I was driving in high school. That I had that because our great uncle had just passed away, and he left about $500,000 to our family. And so that's where all this $500,000 was going, was into this stock called GTF, Cytomedics. And at the same time, my mom and my aunt were members of this website called 3stocksonfire.com, which was run by these two Portugal guys that were pretty good at trading. And that's kind of where I kind of laid the ground for my foundation of what I do now, is stuff that I learned over there. But they were doing, you know, trading all this stuff on the side. Maybe this was after that, but how this all began is I sold my BMW so I could start learning how to trade stocks. So I sold my BMW and put $10,000 in the market, and I put the majority of that into this biotech stock, thinking like, okay, this thing's going up. My aunt has some insider tip or so, I don't know. She knew some guy that knew a guy that talked about some kind of tip for this stock. And so we all bought it at like $4 per share or something, and it ramped up to about like $7 per share within probably a month. And so everyone's super stoked. Everyone thinks we're getting rich, and that this thing's going to 20, and this is easy. You know, this is all you got to do is just buy stocks, and it goes up. And so I remember, I think I was home for college summer. My girlfriend's sleeping in my bed. My mom's in the other room, and I wake up at 6, and I'm like looking at my stock screen, looking at GTF. Granted, I had sold GTF about a week before this. I didn't tell anybody that I sold it. I was bored. I want to learn how to trade stocks. But everybody in my family had, you know, fantasy shit about this stock going up. So I'm looking at my screen, and I'm like, oh man, it's early. What's going on here? And I'm like looking at GTF, and it's trading at 50 cents from 7 the previous day. And I'm just like,
you gotta be kidding. Shit.
What the And so pretty much my entire family's inheritance that they got was wiped out that day. You know, my mom was in it, my aunt was in it, my mom and her sisters were in it, my mom's boyfriend was in it, my girlfriend was in it. So that was kind of my intro to the stock market, was seeing how you know, screwed up it can be, especially if you don't play by the rules of the game. You know, that's what it really boils down to in the end, is being able to know the rules and actually play by them. You know, my family put all their money in this one stock, this one basket. They didn't know shit about the stock market. They didn't know anything about this stock. They just had some tip from some random guy that, whatever, I didn't know what was going on either. I was only about 20, 21 years old. But from there, after that whole debacle happened, I still had some money left to mess around with, and that's when I became a member of this website called 3stocksonfire.com. And after about a year of just screwing around, I was in there every day. At this point, after about a year, I didn't really care about my college classes. I was sitting there writing, you know, in-depth, detailed blog posts in their forum, trying to like make a name for myself. So I became a popular member of their website, and within a year, I started my own website in 2006, which was thetechnicaltrader.net. And I was still young, you know, I was still like 21 or 22 at this time, and then I'm still in college. I'm partying my ass off. I'm not like that serious about doing this, but it was definitely a passion of mine. But at the same time, I'm partying 4 or 5 nights a week, you know, getting after it. So I wasn't taking it that seriously. And I ran the technicaltrader.net for 2 years, basically for free, just building my reputation, kind of figuring out what the hell I'm doing in life, if I'm going to go try to be a stockbroker at like a finance firm, or continue with this path. So at one point, I almost sold the technical trader and I had it listed on eBay for sale for like $2,500. Just get rid of it, and I was like, all right, I'm gonna go work for a finance firm and sell my website and just not even take this path. But nobody bought it. I had a couple of inquiries about it. Nobody bought it, thank God. You know, that could have been a totally different path I took. And then in 2008, I actually turned it into a business. I was like, all right, I was actually bartending at the time in Boise, Idaho, and I just said to myself, you know, I need to either, you know, shit or get off the pot and turn this into a business. I can't just keep doing this for free. I got to go figure out something else to do. But I'm trading at the same time. And so I eventually just said, hey, I'm no longer doing this for free. So at that point, I had built a pretty good reputation for myself as far as people, you know, trust me with, I knew what I was talking about doing. And so it was cool because I had so many people sign up. You know, I made $30,000 just from people signing up that opening launch of my business. And at that point, I was only 23 years old, just started my brand new business, and I was like, this shit, this is the real deal. Like this, people actually, you know, trust what I'm doing because, you know, I had built a rapport and a reputation that people, you know, said, okay, yeah, I do want this service. You are valuable enough to pay for your service. So that was 2008, and that was right before the maybe biggest financial collapse of the U.S. stock market. So,
Yeah.
and it moved to San Diego, and you know, shit got rough for a while there. There was maybe about 4 months where things were just, you know, chaos. That was when, you know, some of the biggest finance firms were going out of business and stuff. So that wasn't fun at all. That definitely, my business was in the gutter. Trading was extremely hard. At that point, I didn't do any day trading. I was only a swing trader, and there was no way to be able to swing trade through that mess. So I kind of got my start on day trading during that whole debacle of the whole financial collapse. But it was really only about 4 months that was, you know, really bad. And then March, I think we bottomed out 2009, and we've just been killing it ever since then. I eventually joined up with Profitly, which didn't work out, and I'm extremely happy to be back on my own running Fousalerts.com, which I do today. But, you know, at the end of the day, this is 10 years later from when I started trading, and we're, you know, doing the best we've ever done.
Score. Hey, let me ask you this, because this is as you're a swing trader. And I think about this all the time. I used to do only swing trading up until 2010. When the market sucks, I mean, penny stocks or small cap stocks, I mean, they're like, you can't even get like 10,000 shares in volume in some of those things. Like,
Yeah.
what do you do? What do you do during those days? Do you go to regular stocks, or you just hang out and do nothing?
Lately, you know, I've been trading a lot more. Like when the market's in a chaotic mode like it is now, over the last month, you know, if you watch when the Dow is in complete just chop shop, you know, small caps don't tend to have really much substance to them. They don't have very big continuations. Some of them do, but I don't tend to trade those that often. Lately I've been trading more larger caps. Like I just traded GoPro after hours, and I've been trading Lake a lot. Like even though it's kind of a small cap stock, you know, it's a low float play. I've been trading the Ebola plays left and right. You know, APT, VSR, IBIO, Lake, but I've been kind of shying less away lately from, you know, stocks that don't have liquidity in them, because a lot of times if I'm going into a stock at $1 per share and I throw $20,000 at that, I'll buy into that stock, and then next thing you know, it's selling off on low volume, and I can't even get rid of my shares. So my position sizes are getting much larger, and some of these stocks are very low flow. If you look at like PVCT today, which was one that was breaking out over $1, but the volume was so low, I didn't want to buy into it because it could have worked out. If it goes up, you know, I make a lot of money. But if it doesn't work out, I have nobody to sell my stock to because the volume.
Yeah, that reminds me of, like, I think it was a couple years ago when we were really chatting on GChat, and you meant to buy 5,000 shares of it was $1 stock. It might have been IBIO or something with an I, and you fat fingered it and you bought 50,000 shaurs. And
it was I think it was GSAT, and I meant to buy 10,000 shares at like 60 cents, and I accidentally bought 100,000 shares at 60 cents, and then next thing you know, it's up at $3 per share. But I sold it for like a loss within like,
There
like
was
five
we
minutes
were
or
like
something.
sitting there like shitting our pants because we're like, how are you going to get out of this stock with all
Yeah,
these fucking shares? And it's like a full-time job to get rid of those shares. Like you can't even
yeah,
think
yeah.
about trading because you literally got to sit there and play the bid and ask and sell like
You got to
100
piece by
shares at a
piece it
time.
sometimes. Sometimes you can't just unload it all because you're just going to wipe out the entire the bid there and continue to drop the stock. So you got to be careful about that, especially if your position sizing is getting larger. So you got to be. That's why it's risky to play a lot of these stocks that don't have liquidity. If you're trading with $10,000 to $20,000 per position, a lot of these stocks can't handle that unless they're getting ramped up.
So give me an idea of your trading style, and then like a couple of your favorite type of setups. Like what is it that you do? Like what do you trade, and what's your style?
Basically, I came up with something called the Fous 4, which is basically just 4 different trading patterns that I trade over and over again, and that's all has to do with swing trading. Almost all the trades that I look at, I'm looking at the daily chart as well as the. If you want to give me the control of the screen here, or at least a
Yeah.
screen share, I can show
All
you.
you got to do is go on the left side. There's a green button called screen share, and you just got to click it on the screen on your computer. Yep, I see it.
Okay, is that full screen or is that a?
Yeah.
Okay. So basically what I look at, this is another thing I do. I run Fous TV every morning, so I run a live broadcast for about an hour or two, so you can actually see basically this screen as I'm trading. And with the Fous 4, it's basically 4 different swing trade patterns that I look at. For instance, this was ISR. This was one of my biggest trades earlier this year. In the beginning, March was actually my biggest month in trading I've ever had. I made about $60,000 to $70,000 that month, which is, for me, that's abnormal. I don't make that much in a month at all. But what I look at, this is what you're going to call a gold pattern, which is one of the patterns that I trade. It's basically a stock that's been trading under $1 per share for, 6 to 9 months. You can see this stock has been, spiking up around $1 per share for quite a while now. And it's been continually battling with this range here at about $1. And $1 per share, a lot of people, you'll hear on Twitter, or at least we call it, the dollar roll. Like, oh shit, we got a dollar roll coming up, especially if it's a gold pattern. I call it a gold pattern only if it's been consolidating under $1 for 6 to 9 months. And once it breaks out over that dollar area, there's a lot of upside potential. Typically, the stock runs at least 100%. Not every time, obviously, but a lot of the best gold patterns that you look at will double or triple within that break. So I actually got long several times in ISR trying to anticipate this before that we actually had this big spike here.
Yep.
I got in, I think, like right here. I stopped out right here. I think I got in again right here and then stopped out. So I think I got in twice and trying to anticipate this. I'm very impatient with holding on to stocks. One of the biggest things about me in trading is keeping your portfolio flat or forward. I don't like having drawdowns in my account. If you have drawdowns in your account, then you got to make up for those losses. I'd rather cut my loss extremely short, and then I can buy back into that stock if I want to, but I don't like risking having that stock continue to fall on me if I'm deciding to be like, okay, maybe this will bounce back up, but maybe it'll keep going down. I don't want to hold that stock if it keeps going down. I'd rather just get out, and if it comes back up, I can rebuy that position. So, I tried to buy into ISR twice and stopped out for losses before this actually made its final move. And once it finally broke over that dollar mark, I think I even sold here in like the 120s, right around here, and then it came back down, and I bought again as it looked like it was breaking out highs, and this thing just absolutely exploded up to 375 within 2 days. So me and my students, we made a crap load of money. I think between this stock and several other trades that I was making, I made about $25,000 in 4 days. So this was a gold pattern. One of the things that I teach in Fous 4 strategy, and that's just one of them. And this is my primary kind of swing trading stuff. But I've adapted a lot more into day trading lately. Trying to have the patience to hold on to a stock for that long is a bit difficult difficult because also there's so many day traders out there nowadays that the intraday movements are so random and all over the place that it's difficult to hold a stock.
It's getting a little bit harder. There's a lot of choppiness.
You're trying to hold on to a stock, and you'll be up, and then next thing you know, you're going to be in a losing position. You're like, well, shit, is it going to go back up, or I'm going to continue to lose here? Then you sell it for a loss, and next thing you know, it's back up, 50%, all in one day. So it's very difficult to continue to swing trade like I used to. Like back in 2005, 2006, I didn't even wake up for the stock market opens because I wasn't scared, about what the market might do. After 2008, that's when I kind of, really got into more day trading and active trading because, the market was haywire. There would be days where the market would gap open 400 points before the stock market opened, and if you weren't up and ready to, protect yourself, you could lose a shitload of money. So prior to 2008, that didn't even exist for me, at least, because I only traded since 2005. So going through all these learning experiences definitely changed my mentality and the way that I've traded. Nowadays, I still look for that swing trade, but I'm much more active in day trading as of late because that's just the way the market is, and that's what the lay of the land is. You have to understand how to day trade.
So you trade small cap stocks typically. Do you trade the same stocks when you day trade that you do when you swing trade, or you've got a different style? Because one of the things I noticed, so when I met you first, I was also a small cap trader. I traded the $1, $2 stocks, and all that fun stuff. And then I left it. I did that for years, and then I changed that strategy. I stopped trading small cap stocks because I was a swing trader. The small cap stocks made a lot of sense because you could get the 20, 30, 40% gains.
Yeah.
But if you're a day trader, the small cap stocks, when they're not breaking out, there's no range in them, so you can't really day trade it. So when you day trade, like I like to trade the momentum names like Tesla or GoPro or MBLY, because those little suckers, they move $5, $10 in a day. And
if you're 1,000 shares.
1,000 shares. All you need is a couple bucks.
Yeah. So I've been trading that kind of stuff a lot more lately. I traded GoPro today and actually got freaking screwed out of this thing. I was getting ready to go to the gym, and I'm sitting here watching GoPro blow up here. I'm like, all right, this is I'm looking at it, and it's like up at like freaking, where are we at? $70-something per share, and it was up at $72.50 right out of the gates on earnings, and then it was down at $68.50, and I'm sitting here thinking like, maybe I should just load up 1,000 shares real quick here right before I'm heading to the gym. And then all of a sudden I missed the trigger there. I didn't pull the trigger, and then it's at 74. It comes back down, and I'm looking at it here, and at this point, right about here, I'm thinking, okay, if this breaks out over 72, it's going to hit 74 and potentially just break out there and rip it to the upside. So I actually got long at 71.80 right here for 1,000 shares, and it actually did rip right here. I continued to grind this out, and it almost hit up 74. I wanted to break 74 and blow up to the upside, and at the same time, I'm sitting here waiting to go to the gym because I know I got to do this webinar here tonight. And then next thing you know, it just eats shit on me. I sell it for a $500 loss. I'm like, fuck this. I'm going to the gym. I come back, and this thing's all the way up at freaking $78 per share. So,
one of the things with freaking GoPro and then also trading after hours earnings, if you have size, you always get shaken out because anytime, guys, that you trade a lot of size, when you get like these big spikes, like you look at GoPro, it's spiked up hugely, like 77, and then the next candle, it spiked down $4 freaking on a 1 minute chart. If you have 1,000 shares, you're just you're like so reactive to the movement of your P&L. And as most traders know, if you are reactive to your P&L versus what's going on in the chart, you just get totally screwed, and it becomes impossible to trade. And
and that's another thing. As my portfolio gets larger, it's becoming harder to actually focus on the chart rather than me just looking at the P&L, because I look at I look at what my P&L is over here, and then I'm looking at the chart, but my position size gets bigger, and then it's just it's harder to focus on the actual trade when you're focused on this P&L because your position size is so large. So it definitely gets more difficult mentally once your position size gets larger because you're seeing a bigger number. And if you see that bigger number go into the red, that's when it starts to get scary, and then you kind of panic and get out of those positions. That's what I did with GoPro. I didn't know if it was going to break out or if it was going to, just continue to drop. Especially with earnings after hours, you really never know what the hell the stock's going to do. So it's
really, really tricky, man. After hours, I do trade after hours once in a while, but I always go in, like I'll scale in a little bit. So I might go 300, 400, and then if I saw like a huge flag or something, I might go in bigger. But man, it's such a crapshoot sometimes, and you're right. Like when your P&L is like moving around like $2,000-$3,000.
yeah.
I mean, no matter how much money you make in your life, I don't know. Like I think when you lose or gain $2,000-$3,000, you feel so great or you feel so shitty. You can be a millionaire, and you know what? Like I don't know, maybe it's an Indian thing, but when I'm down $2,000 on something, I'm freaking suicidal sometimes. So like I won't trade that type of size.
Yeah. Oh man, it's definitely, the stock market can be stressful. There's definitely good days and bad days. There's an episode of I forget what the TV show. It's with Kevin James, I think, and it's about the stock market, and it's basically just showing him as the UPS driver, and there's also a chart like going on the screen when the stock market's going up on the screen. He's like all happy, saying hello to everyone, like, hey, how's it going? And the stock market's going down. He's flipping out and screaming at everybody. So it's definitely, mentally challenging game. It's not for the faint of heart. You have to be able to roll with the punches because there's going to be a lot of punches thrown at you as well.
So let me ask you this, because you're like a prime example of this. So I do everything. I do at least. I manage my account completely opposite of Cameron. So it might be an Indian thing, but I take the money out, my profits out every freaking week on Friday. I have to pay myself. It's like I call it payday. I'm like, it's payday. It's payday, and I take it out. So if I make 20,000 or 10,000, I take it out. But one of the things I noticed with Cameron is that when I first started talking to him, he had like 40 grand in his account, and then we were talking last week, and he's like talking about buying a house, and I'm like, well, houses in San Diego are, I mean, you're gonna spend $2-3 million, and I'm like, where do you even get a down payment for something like that? I mean, it's gonna be like 500 grand. He's like, oh no, I mean, I get like 380 grand in my trading account. So he's never taken it out. Where like I take it out every week, he's actually just let his build and build and build and build, and it's piling up. So how do you move the needle on that? Because now all of a sudden your position sizes have to get bigger and bigger incrementally. How are you managing all that?
Yeah, I mean that's what my model portfolio is based on. What I teach is to only put about 10% of your portfolio into your account. But that's when when you're trading not on margin. This is if you're trading on cash. I know you trade on margin a lot, or that's what we also sell in the hedge fund is basically trading on margin, so you have buying power.
I'm margined out, baby, all the time.
Yeah. So it kind of depends. Right now I trade with about 300K in my account. But I've spent a lot of money too on my trading money too. This is just building it up over years. But and I really only consider myself a part-time trader because I really only trade the opens for 1 to 2 hours, and then I'm done until the close. I'm not sitting there hacking it out the entire day trying to scalp anything I can. I basically just trade the patterns in the morning. That's when I run Fous TV. And then I'm basically maybe even done for the day, or I'll come back for the close. But I'm really only a part-time trader, and fortunately for me, I also run a successful business that can support my lifestyle and support me as well. But I also make good money trading. Like I bought my Maserati with trading profits, so that's being all paid for with money that I make in the stock market. It's just I don't fully rely on trading. But that's the thing is almost all my students have a job. Everyone's just kind of a part-time trader that's in my chat room. So they all have full-time jobs. For most of them, they're either trading at work, or whatever. And that's kind of like me as well. I'm trading part-time, but I also have a full-time business that I run.
Sure. So, hey, let me ask you this, because I think that's really important. So a lot of people think that when you don't trade the full day, it's because you're lazy and you're out partying or working out, and we may be doing those things, but there's a reason that we don't trade the full day. Like, I also don't like trading the full day. I like going to the beach during lunchtime or stuff like that, and people get angry. They think that you're lazy, like you're just living this awesome life. But there's a reason behind it that we actually don't trade the full day. Like, why is it that you trade the morning and then you go and work out and do your stuff and then come back?
Basically, because the middle of the day, there are opportunities there, but the likelihood of you taking full advantage of those, there's much less movement during the middle of the day. When you get in the morning session, within like the first 15 minutes, these are what I call F1 patterns. That's basically within the first 15 minutes, that's when you find these triggers, and they make their run, and they might only last 30 minutes to an hour for those runs. After that, you get in, get out, you could be done for the day. And a lot of the times, I should just be done within the first 30 minutes. I can make a couple grand, $5,000 within 30 minutes, and then I stick around and keep trading, and next thing you know, I'm down to like $2,500 in profits. I'm like, should have just freaking walked away and locked in his profits, because the middle of the day, there's a lot less action, and it's very easy to overtrade in the middle of the day because you're just sitting there bored, and you're staring at a computer screen, and you feel like you should be doing something, which a lot of times you shouldn't. There's no opportunity there. If there's not the exact right setup that you're looking for, you should either walk away or just monitor it. But if you sit at your computer, the more temptation you're going to have just to make a trade just because you're bored. So the thing,
we are the king of boredom trades. It's happened. I mean, since I've known you, we both, when we stayed during the middle of the day, there's something me and Cameron do, and sometimes you can egg somebody on, like, oh man, check this out, check this out. And before you know
talking about ideas, and you're like, all right,
I gotta do it. So guys, there is a structure to the market that's really important to understand. That in the morning, stocks make a move based on PR earnings, market gaps, whatever it might be, but that's where the volatility is. But that first 30 minutes of the day is about price discovery. So stocks can travel exponential movements at the open, and it's about price discovery. A stock is trying to figure out where it's supposed to be. Then what happens after that first, say, hour of the trading day is stocks do something totally different. Now they've made their initial move. In the middle of the day, it's about either a stock doing a retracement as people take profits, or a stock consolidates because it's found its equilibrium. And so in the middle of the day, you'll find this dead action or a retracement. And then what typically happens, and I notice it's around 2 o'clock. I don't know if that's you have found a different time. I know it's around 2 o'clock. Then a stock makes a decision on what's going to happen, and you may break high of days, or you just kind of fade off and do what you're doing. But then that end of the day, you get the action again of where a stock finally decides what it's going to be, and so you have those 3 phases of the day. And for me, as a day trader, each one requires a different setup. So a lot of people trade like, say, flags or flat top breakouts or whatever, but at the open you don't trade those because they don't come about. The action is too quick. You have to have very specific setups that you trade at the open. So like I trade ORBs, that's called the opening range breakout, which Cameron also trades. That's like something that you would get into within the first 5-10 minutes of the day. Then you have very specific setups that you would trade middle of the day, but those ones kind of stink because the stock is either grinding or it's fading. And so for like people like me and Cameron that typically go long, there's not much to do. And then end of the day, you have a whole different measure of setups, which is like you might have a stock that's been consolidating all day, or you might have a stock that's about to crack and have a late day fade. So you have 2 or 3 different setups that you've got to do. So it's very important to segregate your day. And so when you see, like if you're in somebody's chat room or something like that, and you see them just bail out, most of the time it's not because they're out like having fun and meeting a bunch of hot chicks. In Cameron's case, that's probably the case, probably true. For me, I live with a bunch of dudes. That's not going to happen as much. But I'm guessing in Cameron's case, this is true, as he seems to be a lot bigger ladies' man than I am.
But just to reiterate what you're saying, that's exactly how I have a second training course that's all about intraday charting and how to read it. And I divide it up into 3 sections. I call it between, the patterns are called F1, F2, or F3. F1s are my primary focus of trading. F2s, that's the middle of the day. I don't really like trading those. There are opportunities there, but their reliability and the probability that those breakouts are going to work are much less. Then F3, that's when you finally have the F3 breakouts into the close, which a lot of times when those break out into the close, you might see a gap open on those into the following session as well. So it's the same exact thing. What you said is what I teach as well, is there's 3 different parts of the day: opening, middle, sucks. Sometimes there's opportunities there, but it's the opening and the close that are basically the primary areas of focus to trade with.
Do you ever feel the pressure to trade like more because you got a chat room of people that want to?
Yeah, it's definitely it's changed over the years.
I feel you tune it out better than I do. Like you're still able to, like you feel it, but you can still separate it and just go.
Yeah,
I get sucked in sometimes when I don't want to be.
Yeah, no, I mean, sometimes I'll just be there because I'm bored, and sometimes trading is boring. You're just sitting here. Especially I work at home by myself, so sometimes I ain't got shit else to do. I guess I'll just hang out in the chat room and bullshit with my students. But at the other same time, I'll either go work out during the middle of the session or go get a run in, or I'll run down to the coffee shop and hang out there for a little bit. But the only reason why, if I walk away from the trading room and I'm here, it's because it's either the middle of the session or there's just not that many opportunities going on, or it's because I'm having a bad day. And a lot of times, if I have a bad day, I don't necessarily feel the need that I need to come back and try to make that money back. And that's what a lot of people get into, is a downward spiral where they start making revenge trades just to try to make up. There, he raising his hand. Just to try to make that money back because they feel the need to do that. For me, a lot of times, if I have a bad morning session, I'll maybe even just call it a day. Be like, all right, you guys, I'm just not feeling it today. The trades aren't rolling. Sometimes the best thing you do is just walk away, or you might just continue to dig that hole even deeper. And the best thing about trading, especially if you close out all your positions overnight, you can wake up, have a brand new day. There's a brand new set of opportunities just to reset, basically hit the reset button and start over. So sometimes I feel bad about leaving, but other times it's like I might help you guys lose more money if I'm here. So I'm gonna walk away. I lost some money, so I'm calling it quits and I'm done for the day. There's always tomorrow and the next day after that. So yeah, but when you have people paying you for your service, there's definitely that pressure there that you're expected to be there and you're expected to help them out.
Yeah. It sucks.
Yeah.
Not like sucks. Like I enjoy it, but I do feel like sometimes I want to do well for everybody. Like I don't, like for me, if I lose $2,000, like I don't really care per se, but I do care because you cost other people money, and so that sucks.
Yeah.
So you want to make it back. And so like there's trading patterns, and then there's like the personal psychology of individual traders that all traders go through, of wanting to make money back. And then us as business owners, we have this second layer to it, which is that we have to perform, otherwise we won't have a business. And so you have that need to always want to go and perform. And I stepped away last Monday because I lost like $3,000 like at the Open, and I kept sneaking back like, man, I should make this back for everybody. And it took like all my willpower to not do it, because for me at least, I don't know how it is about you, but if I start off slow, I very rarely make a comeback. Very rarely. So my $3,000 loss could turn into a $10,000 loss if I stay, because I never make the comeback. Once you make 3 or 4 bad trades in a row, it means your game is off.
You're screwed up mentally. If I start out the day in the red, I'm most likely going to be hesitant and not confident to go into the trades that I need to with confidence after that. So if I start off, exactly like you said, if I start off with 3 losing trades in a row, I'm like, all right, shit ain't rolling today. I'm done. So it definitely affects how you start your morning, how the rest of your day is going to go. And it's basically a 50-50 chance. And, you know, my trades, I lose 50% of the time. Every trade I make is either a win or loss. My win ratio is only about 51%. But the only reason I'm able to win is because I do cut my losses short, extremely short. And when I have a good winner, I either take quick profits or sometimes I'll have a really big winner and let it ride it out. But, you know, I'm really only a 50-50 chance trader. It's just money management that allows me to make money over the long haul.
So, guys, it's really, really important to understand. So there are chart patterns that you play, and then every trader has personal patterns that are even more important, which means there are some people that can lose, and then they make the comeback. And then there are some people that lose, and then it turns into a downward spiral. So, like for both me and Cameron, what happens, our personal pattern is that if we start off slow and have to leave. Now, I find that's true with most traders. Now, but it's important to understand your personal patterns. Like Mary Beth, she always loses like $1,000, $2,000 in the morning because she's feeling her way out, and then she makes it all back. She starts going bigger and bigger and bigger, and she finds her way. But that's her personal pattern. She always loses in the morning. I've never seen a day where she doesn't lose in the morning. But it's because she's testing things out. She's okay because her personal pattern and her willpower is a little bit different. She has a bigger tolerance for risk, and so she'll take $1,000 loss or $2,000 just to see how a stock is acting, so that at some point later in the day she might load up 10, 20,000 shares or something, and then just crush it, and she'll make back that 2,000 and then make 2,000 profit. And she'll end up with 2,000, but she's okay with that wild swing where I can't stomach that, you know, and so I have to leave. So it's really important, guys, to understand your personal patterns. You know, I have another thing that causes me losses too is that I don't know. Well, you're on West Coast, but when I'm on the East Coast, you know, I work out in the morning at 5 a.m. So I got to get up at 4:30. So if I get like a really good pump. Like I'm talking like a pump. You know when you get that like awesome pump where you do like 100 pull-ups and you got dips going and like you're just like veins are popping out of your arms.
Yeah, you feel great, dude.
And you're like sitting there flexing in the mirror like, look at me. Every time I do that, I get really pumped up. Like I go into the open all giddy because I got all this blood flowing, and I had like 3 cups of coffee because I woke up so early.
Yeah.
And so right off the bat, because I got this freaking pump going, I'll literally, my students and subscribers will tell me, I'll sit there and do this to them. Like I'm like, oh yeah, like and start flexing because I'm like so excited. I always lose. I'm too fucking pumped up. Like I'm so pumped.
Yeah.
I go like. I'm all in at the open on some bullshit stock that nobody's ever heard of, and then I lose because I got too much of a pump.
That's hilarious. But yeah, no, trading is all about having a fucking just a calm demeanor. I feel like you have to be. You can't react to a lot of different things. You have to just be looking at to focus on the chart pattern rather than focus on how much money you're going to lose. You got to focus on what your strategy is and how you're going to execute that trade. But as far as waking up in the morning, for me, I get up. The market opens here at 6:30 in the morning. My alarm goes off at 5:45, and I'm pissed off as fuck every morning because I look at my clock and all I want to do is go back to sleep. So I've been waking up this early for like 10 years, and it still sucks every time. And by the time I'm
terrible, I hate West Coast.
Oh, it's awful, dude. But by the time I'm about ready to run Fous TV, it's like 6:25, and I'm still like doing is talking into the microphone. But I do it every day. You just gotta wake up and grind it out. But it's like when I was in Miami, and we were out 3 in the morning, and I was still able to wake up and be like, it's 9:30. I could wake up like this and still be able to work. But here, I I can't even go out during the week at all. I went out last Thursday. I was just going to go have a couple drinks, and then next thing you know, it's 3 a.m. and I'm still partying. And so obviously I didn't show up for work on Friday because that's in 3 hours. So at West Coast, you literally can't do anything to the week, which sucks. The only good thing is that you get the stock market closed at 1 o'clock. You have the rest of the day go do whatever. Sometimes I'll take my boat out during the summer, during the week at like 2 o'clock, while everybody else is at work, and just having a great time. But waking up in the morning, like I've seriously considered moving East Coast just for that fact because it's awful every time.
I got two guys in my chat room, Chris Kuiperman and Michael Chesna. They live in LA, and they got the motto because West Coast trading sounds great on paper. When I went to California for 3 months last winter, instead of go to Costa Rica, I just went to California. Because I needed better internet access, so I was running all those webinars. It sounded great. I'm like, oh, I'm gonna be done at 1. I'm gonna go to the gym, then I'm gonna go out, and I'm gonna do all this shit. And it never happens because you're so tired by 1 p.m. Because I wasn't
by 1 o'clock. You want to go to sleep, dude.
Yeah, I wasn't going to bed at 9 p.m. so I could wake up at 5.
I have sunlight simulators on both sides of my computer now to try to keep me awake during the day. I'll show you both of these here. I have this one right here and this one right here. These are sunlight simulators to try to keep me awake because by 1 p.m., even by 10 a.m., all I want to do is go back to sleep because it's so difficult to try to frickin'.
Oh, yeah. So these guys told me they got a motto that West Coast traders do. You booze, you lose. You lose.
Yeah.
No matter what. It happened when I was in California. We went to Santa Barbara for a while, and then I was with you for a while. And so, obviously, if I'm with you, we're going to be boozing.
Yeah.
And Santa Barbara's a college town full of freaking chicks. It's all chicks. And obviously, you get a little carried away in the nightlife. And it was no matter what. You booze,
you lose.
Because
if I go out during the week, I don't show up the next day. It's pretty much hands down is how it goes. I don't even try. I used to when I was young. When I moved down to San Diego in 2008. So I think I was like 24, maybe 23. I don't remember. 24, 24. Yeah, I could go out. Like I used to go out on Tuesdays and Thursdays when I first moved down here. Now it's like I don't even like Thursday. Like sounds like a really bad idea. Like I try not to. I just went out on last Thursday, so I can't say that. But I didn't intend to. I intended to only have 1 or 2 drinks, and then shit got out of hand. But yeah, I can't hack it anymore.
You booze, you lose.
You booze, you lose.
You know what? When I'm in Detroit, man, I'll freaking even if I don't go out, I might watch Netflix till fucking 3, 4 in the morning because I only gotta wake up at 9.
Yeah, see, for you can be up at 3 in the morning, and you're still like, that's basically you going to sleep at 3 in the morning is me going to sleep at midnight. Because I go to sleep at midnight to 1 a.m. every night. So that's like basically you going to sleep at 3 a.m. to 4 a.m. every night. So
let me ask you this. This is I noticed this with some of my new tricks. What do you think out of your students? What is the number one thing that's holding them back, like holds people back from success?
The number one thing that holds them back from success is the number one thing that holds back anyone from success, and that's not going through the proper training or not setting themselves up for success. They're setting themselves up for failure. So a lot of people come into my website and they see my training stuff, and the first thing they see is got to get started with your education, and they see that it costs money and they don't want to spend money. And so they just go straight in the chat room, and a lot of people come in and just start asking all these dumb questions, and I'm like, all right, this guy's obviously doesn't know what the hell he's doing. He hasn't gone through any training. He doesn't know anything about the stock market. So It's like, what are you doing in here, man? Why are you even trying? It's like going into a really important college exam without even studying and just being like, screw it, I'll just go take this test. Why not? See how it goes. Like, why? What the fuck are you thinking? You have to go study to be good at anything. If you want to be a good ball player, you have to, practice. And that's the biggest thing that hold back my students from making money is a lot of people don't go through my training program first, and they think that they're just going to come into the chat room and start making money. And a lot of people, I have an alerts. It's called Fous alerts. I send out an alert anytime I make a trade, anytime, I call it out live on Fous TV saying, hey, I just bought this stock at this price. But if you're sitting there waiting for my alerts, you're late to the game, you're trying to trail what I do, which, isn't impossible to do, but if you really want to learn how to trade stocks and actually make money and be successful over the long run, you need to be prepared to make these decisions for yourself rather than relying on me or Kunal for those decisions. You have to learn the rules of the game, how to follow them, and just learn how to be a trader. You can't just rely on somebody else. So the number one reason why people fail is that they're not educated, they don't go through the proper training, and they just dive into the stock market without knowing what they're doing. And that's what I did in the beginning too. I just was like, screw it, I'll just start trading. Like the first trade I ever made was some 50-cent stock. I don't even know why I bought it. I just found it somehow through E-Trade and I bought it, and I obviously lost money on it. But that's how I got started. I didn't know what the hell I was doing, and it took me about 3 years or so before I ever started consistently making money. Basically, just because for one, I didn't have any kind of formal education in trading.
I lost for 5 years. 5 years.
Yeah, and
I had periods where I made money, but it wasn't.
You don't make it consistently. You lose it. You make it, and you're like, then you get a big head, and you think you know what you're doing, and then you go blow it all because you try to go big on some trade or like. I remember I made a bunch of money on something, and then I got into this company called Games and Flicks, which was supposed to be like the next Netflix for like video games and shit. And I think I lost about 50% of my portfolio because I went all in on it, and it was like a 0.005 cent stock. That's another thing. A lot of people get into penny stocks, and I don't necessarily trade penny stocks. I promote that keyword only for the fact of SEO, of which my SEO is complete dog shit, so I don't even know why I say penny stocks. But it's a highly searched term that a lot of people search for, and I'm looking for traffic. I run a business. But I don't necessarily really trade penny stocks all that often. I don't like to trade OTC stocks. I really only trade stocks that are on the NASDAQ, AMEX, and New York Stock Exchange. Occasionally trade, stocks that are around 50 cents to $1, but I'll never trade anything that's, 0.005 crap, fucking any of that stuff. So I'm not a penny stock trader as much as people might think I am.
Yeah, I see you trade all sorts of shit.
Yeah.
So that's the same type of thing. So for me, I had $500, and then I turned it into $50,000 because it was the freaking .com boom. .com boom, everybody made money. I mean, it was insanity. And I lost my first bankroll. This is how stupid I am, because in the .com boom, you don't have to have any risk management or have to have any trading skills. You just have to find the right tech stock, and then you just ride it. So I made all this money, and I wrote down, this is how stupid I was as I was 19 years old. I wrote down Amazon for almost 200 points. Like, think about that. How stupid somebody's got to be to ride something back 200 points. You were so conditioned that, like, if something pulled back, it would just bounce back up.
It's going to go up for sure.
And Amazon actually went back. It went down to $4, I believe, or $2 or $4. So I guess getting out 200 was okay. But I mean, I had lost my whole bankroll at that point, anyways. And that shit happened all the time. So I'd make the money back. I started with $2,000, and I made a bunch of money again. And then I lost my whole fucking bankroll on this stock called Global Crossing, which at this point the tech bust had already it was busted. And I bought this company called Global Crossing at $5 because their CEO was online going, "Oh my God, like, we've got 3 billion miles of undersea fiber optic cables." And I'm thinking, like, that's fucking awesome. 3 billion is a big number. Fiber optics, I don't know what the fuck that means. That sounds awesome. And he's on CNBC. Like, what could go wrong? So then I bought it, and of course it went to $3, and I doubled up. And then it went to $2. So I doubled up, and it went to $1, and I was doubling up. And finally, I got a margin call, and then the stock did rebound a little bit later, but I was margin called out. And at that point, I was
You're
so
good.
screwed because I had student loans out. So, at Michigan State, my parents, my dad was giving me cash to pay my tuition. And I took the cash and I traded with it. And then I took student loans